one of the best ways that we can pinpoint strength in the markets isn't necessarily that broad look at the ES or the NQ or the YM, etc., right? It's actually to get a little bit more detailed at the sector level. So when you're looking at sector level strength, take a look at how the last month has been very good, exceptionally good, to energies, communication, financials, industrials. Those are kind of your largest, your best gainers there, right? So make note of that. XLC, XLE, XLF, and XLI. Now let's dial that down to about a 5-day. All right? You can see how the pullback has been affecting all of these, but what's been affected the least? Well, interestingly enough, so where do we have overlap between the 1 month and the 5-day? XLC, all right, XLE still doing very, very well. XLF, not so much. And XLI, is XLI holding its own? Yeah, pretty well. So when the markets are pulling back, what's the least weak? So then from that scan, XLC looks good, XLE looks good, and so does XLI. I'd probably be a little cautious about financials. And when I see that kind of 5-day versus 1 month, when I do this kind of scan, I'm probably going to go more to a stock level on the XLF. So that's one way that I'll start to scan. So then let's go on back over here and take a look at XLC. Is it double green? Yes. Would I be open to being a buyer? Absolutely. Probably something close to the 21 exponential. XLE, would I be a buyer? Double green. In this case, again, I'd look at the 21 exponential. So I've got a 21 exponential working on C, on E. Now let's go take a look at I. And this is pretty darn close to the 21 exponential. So again, 21 on I as well. Now, for those of you that are wondering, well, how does this work? How does this contribute to the way in which I would look at the NQ, the ES, and the YM? Well, YM is an XLI story. ES is going to be pretty sensitive to XLE and C, and NQ is XLC. All right, it's an XLC narrative. So you can see where the broader averages are going to be influenced by these. But this is one way you can start to look at, do I want to be a buyer here? Are these some of the better relative performers, and how have they fared when the market's pulling back? Now, the XLF I mentioned, I want to get to a stock level. So in a separate conversation, we'll talk about, doing a scan of the boats, as we say, and find out where within the XLF I might look to be a buyer. Now, remember, the XLF, if it recovers, benefits the S&P and the Dow. It would be very beneficial to both those markets. So keep that in mind. Think about how the individual sectors and stocks are influencing the broader averages, not just the other way around.